Yeah, thanks, Kevin and Tony. Very, very encouraging, obviously, for everybody who's listening in there on the plant expansion, and then also that we have ability to obviously move resources into reserve. So, given that there was a bit of a dynamic in the market, which translated into significantly higher prices now on a week-on-week comparison, we thought that we'll give you a bit of more insights where we see this is coming from and potentially where it's heading. But this slide here, I guess you're all well aware of the significance of tungsten. The bottom left showing the rating of the European Commission. Was just in Brussels 2 weeks ago and met with a committee there, and they have effectively launched the Critical Raw Materials Act and the related programs, which allows companies, and that would very well qualify for obviously our Saloro operations and the envisaged expansion program, that we starting from the end of this month until August call for proposals. And yeah, I believe, I'm confident that we can likewise put some very solid propositions together, as much as we have received now with this latest Queensland funding. And throughout the last years, we have been grateful that the Australian government had been so supportive, and we see similar dynamics now in Europe. So, and that is primarily due to the fact that you see in the bottom right pie charts, the fact that China sits on quite a lot of supply output into the markets. And you do recall earlier presentations where we highlighted the end use consumption, the end demand, effectively driven from various sectors that I indicate next slide. But that's mainly a third within China, another third North America, Japan, Korea, and a third within Europe. So there's obviously that misbalance, and that's definitely a reason why tungsten is classified as a critical mineral across the board. So maybe jumping on, that's also not new. We've always outlined the key sectors where tungsten is used. You see that in the left supply demand overview. Automotive, I would say that despite a great push towards electric mobility, we do see extension of production programs towards hybrid models. So that will definitely give the combustion engine a bit of a longevity compared to what maybe initial announcements were. Again, a lot of tungsten tools are being used across the automotive manufacturing chain. So probably we see still pretty strong demand from the automotive sector. Mining probably going through a revival, seeing where prices are heading at the moment. And then oil and gas. One of the indicators that we are tracking is the number of oil rigs, in operation. North America, we are now sitting at slightly above 800 rigs. So these are some of the parameters or indicators that everybody, all of you, can track, because this is the driving force in for example, oil and gas production exploration. It's numbers of rigs. We see in aerospace record orders for Boeing and Airbus. Automotive, I indicated. So these are the more traditional sectors where tungsten is used. And then we have the military. I don't think I need to go into detail there. Fortunately, the manufacturing of military equipment and ammunition, specifically where tungsten is used as penetrators, is rising double digit at the moment. And then the green energy space and the semiconductor industries, and this is what we would call the new industries, and we see double-digit growth coming from there. So that's probably giving a good indication what are the end sectors, the end use sectors that are up and rising, and it all results in a great consensus across. We have shown here just 3 pricing agencies, or even the Tungsten Association itself put out forecasts. So it's not our own; it's a consensus number. And that leads towards more than 10,000 deficit in average by the end of the decade. And with the recent price dynamic, you would think that we are already in a deficit. The next slide is giving you a bit of a drill down perspective. The prices that are published on the left there, as you might follow that, some of it we will publish on our LinkedIn page. But very strong developments over the last 4 weeks. Specifically, we have reached prices which are above a level that we've seen last 1 year ago. And you see typically it moves with a relatively mild dynamic, but you see that the curves are shooting up like hockey sticks. Difficult to say where this is ending. A matter of the fact is that it's very difficult to book material at the moment. We have a good oversight on what is traded from China into Europe at what prices. So we are tracking custom information, and then I would say that's definitely not the end of the game for this year. So there's quite some pressure. Where does that pressure come from? The top line there, the 4 boxes, explains the narrative. It's all about China from I think a global driving engine for the world economy, but also the supply side, right, and the constraints. And how does that translate into trade balances? Now the great narrative that everybody's using for policy making across the board is national security, and everything has to align to that mandate. And the question is, with the onshoring and the decoupling of supply chains globally, are there sufficient projects on the landscape within China, but also in the Western world in order to feed the requirements of these markets? The 3 bullet points, I've just picked the 3 highlights for me personally in the last couple of months. Number 1 is in end of November, the Ministry of National Security of China defined areas of critical materials, tungsten one of them. And subsequently, beginning of 24, the government had reduced the production quota for the tungsten sector. And that is haven't been seen in decades, right? So it was always a little bit on an uptick to promote domestic mining of critical minerals. But the government clearly shuts down on that idea and is reducing the quota for 2024 and is expected as well in 2025. So they are certainly trying to manage the outflow of tungsten. Second one is the fact that there was a new round of environmental inspections just announced a couple of days ago within China. That typically leads to a seasonal stoppage of some mining activities in some areas, especially small-scale operations are shut for a couple of weeks. Let the inspections pass by, and you might see them coming back. And the third one, looking over the ocean towards the US, quite significant. The fact that the Defense Logistic Agency, which is in charge of stockpiling strategic materials for the US economy, has announced in May 2023 that they're not going to further publish, specifically on tungsten, not further publish the stockpile informations and what industry participants are actually extracting from the stockpile and what the balance is. So that clearly indicates that stocks are extremely low and leads to speculations where the DLA themselves, not really an end consumer, but just as a stocking agent, will come back into the market this year. And that means additional demand and additional pressure on prices. Not many people maybe look at trade statistics for China. Again, the largest player in the market. So we are tracking those informations. And as you're all aware of, more and more stringent transparency laws, specifically in Europe and US. I think the private sector starts to realize that some of the imports into Europe and US, and you see them on the right, the export from China means import into the Western world, 10,000 tons, quite significant. Europe, Japan, South Korea, US with more than 90%. That those importers are obviously trying to understand how the Chinese industry is, converting on what basis of raw materials. And if you simply look at the import balance on the left, 5,800 tons of tungsten equivalent in concentrate, the country that you read in the bottom, representing 78% of the imports, are not necessarily countries that will take a pass on the transparency requirements that the laws provide, again, to private sector in the US and Europe. So that's something that drives diversification push, and EQ Resources, as the largest non-Chinese producer, is certainly on top rank. And me to the final question on where does the new supply come from? So we concluded that there's a squeeze coming, if not already in place, looking purely at the last week's price dynamic. And a matter of the fact, when you look at our own bankable feasibility study, had a market report backed up by a third-party agent, pricing agency, market agency, which have indicated a number of projects outside of Asia that would come online in the time period 21 to 24. And we've just listed down the top 5 projects in terms of output. As you're all aware, there's another company in Tasmania, good friends of us, in a ramp up. We wished him luck, but it's slightly behind schedule. A large project in Canada, it's in the market since long, was supposed to be going in production 2023. They're just in a funding round to keep going on their studies. So it's nowhere near delivering tungsten units. South Korea, a project well known to the market, should have been in operation 21. They're still under development, I would call it. Might come a bit later than people anticipate at the moment. Another one in Spain, which was cancelled completely. Significant tonnage, 1,000 tons annual output, was scheduled for 2024. It's off the table completely. The license had been revoked, and we wouldn't definitely see that moving forward. And in the UK, also a project that is well known in the market, 3,500 tons, was supposed to be commissioned in 2020, started up, but they changed ownership a couple of times, and it's on a complete reset. So what does that tell us about the forward looking? Again, we're not here to be able to project prices, but we are going into a squeeze, and we are not seeing any project in a state where we could argue that it will bring additional units into the market in the next 12 months. So I hope that gave everybody a bit of an overview, and please reach out if any question in this regard.